The following is a presentation of TFNN. The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. And don't forget, you can listen to us at TFNN.com on Tiger TV, watch the screens live, or listen to us anywhere on your mobile phone at TFNN.mobi. Well, let's check out where the markets are at right now. We got the S&P down 18.5, almost 19 points right now. We got the NASDAQ down 28. Russell's currently down 11 points on the day. We have the Dow currently down 186. Gold is up 23 points. So big move, a lot of big moves in the market today after a quiet yesterday on the indices. Decided to make up for it today. Looking over at silver, it's up 1%. We got copper down 1.5%. We got oil currently up 94 cents on the day, almost a 1% move on oil. And we got natural gas is currently up nearly 2%. So remember, we had the natural gas and the oil inventories come out. Both of them come out today. And we had corn right now. It's up 3.5, and soybeans is up 3 ticks. So pretty quiet there on the ags. Over on the currencies, they're pretty loud too. We got a euro dollar 131 pips. We got pound dollar at 44. We got Aussie dollar down 108. The euro yen's currently down 3 pips. The U.S. yen is down $1.07. Pound yen currently down $1.25. We got the dollar CAD up 71 pips. And we have the dollar freight down 120 pips on the day. So big moves today happening across the markets. And, we've had quite a few, little news things and all that, but a lot of it is starting to really take effect right now. So let's do a quick recap and look at everything that's come out this morning. Remember, WEF meetings are happening, so little news snippets leaking out from that. This morning we had a couple earnings releases. We had Procter Gamble. It came on out this morning at 7 a.m. So let me pull up a chart on that real quick. We'll check it out and look at them side by side. So let's see here. We had United Technologies yesterday. There we go. All right. So going on over here, we got Procter & Gamble. All right. So, and you can see on the news release there, let's see if they got the details. It was pre-release. So 7 a.m., so they didn't mark it. But let's check out the other one then. So we'll go in and let's look at, we had Mickey D's, McDonald's releasing earnings. I know it was a little bit worse than the expectation on that. So let's look at that one. But as you can see, Procter went down, Dow went down. Look over at McDonald's, which is there in the Dow. And McDonald's, it dropped down right off the release, but it's made a little pullback. So, I haven't looked at all the earnings release data on that. You can check that out and go, what were the analysts? Was it, did they not beat estimates? But did they look at, positive future forecast? People are going to keep eating hamburgers, etc., whatever. But anyway, so it popped on up, but the Dow still dragging down. And McDonald's is not dragging it with it. So McDonald's is fighting the trend today. And that was this morning again at 8 a.m. Let's see if it released. Yeah, about right on time there. So we had that early release. And so we try to estimate the wire release times based on when they've been released in the past. We got the unemployment claims number. That one came out at 8:30 this morning. So let me pull that up. And unemployment claims was released this morning, was a little better than expected. Came in at 326 on an expectation at 331. At the same time, you had the CAD core retail sales came in at 0.4 and an expectation of 0.3. So both of those being positive. And the retail sales was 0.6 on 0.3 on the Canadian dollar also. Let's see, going a little bit further down in the day, we got existing home sales came in much worse than expected. 4.87 million on an expectation of 4.94. And on the unemployment cells, a lot of times we look at doing, potential, straddles or strangles, leading up to. And so let me pull up a chart and we'll look at some of those binary butterflies instead of the straddles and strangles. Let me pull up a chart on those and we'll see what kind of movement we got on them. Here we go. And let me change this one little setting on here up on my session template to default 24/7. There we go. All right. And so on the default 24/7, we got that built in. Now let's look at when the release came out. It came out at 10 o'clock. The expectation on the US yen was a 25 pip movement for an hour high to low previous to the release. So if the release came out at 10, we'd be looking at 9. And we'll just go over here to 9 o'clock. Let's see if we stayed in that range or not. We got a pretty big, we had a little move up there. And then on down, about 30 pips. So it actually was pushing outside its range on the high to the low. Had a lot of market movement happening. It was moving down pretty strong this morning already. Let's look at some of the other ones. Wider one, euro dollar, 30 pips. And we just had a lot of volatility this morning. It would have been a rough butterfly time. But let's go in and go low. The high. Actually, I guess our high would have actually been right there at the 905. About 17 pips. So that one stayed inside the range for the hour before, leading up to the release. And let's see, what else do we got? We got dollar CAD, 30 pips, dollar franc, 30 pips. So let's see if they stayed inside that 30 pip range for you to be able to take advantage of them. So right here, 9 o'clock. $43. So dollar CAD moved a little bit more. But remember, we had CAD announcements come out this morning. So I'm not surprised we have a little more volatility in it. But it was a little more than the usual expectation on dollar CAD. Dollar franc. Didn't have anything happening this morning on dollar franc. So let's see here what that one did. So that chart loads up. And we'll look at the 9 to 10. That was after the news, so pre-news, 18. So all the ones that didn't have news looks like did pretty well. The ones who did have news on them looks like they moved, obviously, and that should not be a big surprise. All right, well, that gets us caught up on the U.S. existing home sales report. Also gives us a couple tips to write in our journal. Things you learned today would be avoid the ones that have news early that AM when doing butterflies, because that will cut down on the volatility that you're going to see. If it has news, it'll add to the volatility. So, because we have the, like I said, we have the Canadian retail sales happen this morning. Now let's see. What do we? It happened at 8:30. So for a couple hours there, we could get a move, and it does usually have a bit of a move. The average move on the Canadian retail sales is about 60 pips, but it only breaks 50 pips. It's actually a little less than 50% of the time. So it's one of those trades I don't really straddle or strangle, but it also can add a word of caution for doing a binary butterfly on it. And what do we got coming up this afternoon? Well, we had the week of natural gas that already happened. Let's look at that real quick. We'll dive into natural gas. There we go. Report came out, and the inventories on the natural gas storage at negative 107 on negative 112. Not just a big shocker in and of itself. We already had a pretty big move on natural gas yesterday. But we can look at what was the impact of the report. We had a move of about 78 ticks up. So, and then it fell on back down. If you're looking at 2 hours after the report, right there at 11:30. So we got to stop it here. 122 down from the high, and about 45 down from the release. So it's pretty hard. Not a lot of people they want to go and they want to trade these inventory reports, but there's so much premium already built into oil and natural gas because they usually move so much already. They're harder to trade straddles and strangles on. Let's check out oil. Oil a little bit different today. Had that release. So on Thursday and was delayed by 30 minutes. Usually at 10:30 on Wednesday. Today was at 11 o'clock. So let's go on over here. See what we got and sort of make sure I'm on the best one. It don't look like we have a ton of volume on there. And let me check that. I think we rolled over, didn't we? We're on 0314. Don't I have that? I don't have it built in. That's the issue. I'm seeing all these gaps on the chart, and I'm like, that shouldn't be happening on oil. And there we go. Okay, see, now nice clean chart. And so it's good just to be able to notice that stuff. But I thought I changed my default list. I guess it's on my other computer. But I need to update it on this one also. But looking on over, we had the inventory report came out this morning. And the results on crude oil was 1 million on an expectation of 0.7. So that should make, I mean, you could say that's going to make oil fall, but that it's really, I mean, it's not a massive offset. So we did get a drop. But then after that, market flew on up. Right there. So we got about a 43-cent down move, 55-cent up move from a high to a low. That's a nice move. We're going to get about 90-something cents or so on oil. So you had a nice little, straddle strangle possibility if you could have got it cheap enough. So that would have been the real trick on that. But it might have been possible. I was working with some other traders today, so I didn't have a chance to look at that one. But it might have been possible today because it may not have built the premium in as effectively due to the delay in the release not being at the normal time. So the algos might not have kicked on the IV. I'm not sure. But if anybody did trade that, you got to let me know about it. Okay? Anyway, so we got the crude oil inventories at 11 a.m. Now, what else do we have coming up today that you need to be aware of? Well, the one big thing coming out today, Microsoft is going to be releasing their earnings. They just bought Nokia. Nokia reported, losses. So, that obviously has an impact on Microsoft. Microsoft is in the NASDAQ 100 and it's in the Dow. So that could have an impact. It's later, though. Like the release is usually about 4:10. Now, they may be 5 minutes early or 5 minutes late. But usually the release is at about 4:10. And so, make sure you're checking that out. Be very careful at the end of the day if you have any kind of, binaries you're trading or spreads you're trading or positions you have on at the end. If you're holding those positions that, last time Microsoft, when it came out, it rocked the markets. So it's not usually one that rocks the markets that much. But, lately a lot of these earnings releases have had some pretty significant impacts. So just be really careful at the end of the day. If you're holding positions, you need to be aware that that's coming out. You need to, adjust accordingly. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so we're all caught up there on where the news is at, what news is coming up. And just checking out right now where the markets are. We got gold. Looks like it's been trending up, but it's pulling back down right now. Right here into the close. We got about 5 minutes left on the clock for gold futures. I'll go over to see if I see any setup, which is minutes to go. But usually I'm not a big fan of holding into the final two. But I doubt we're going to find what we're looking for. We'll see if we see any kind of premium collection style trade that we can do. And let's see here. Yeah, not really much showing up. I'm just going to look a little bit deeper. See what we got. Yeah, basically it's like 3 or 95. So unless you want to bet on a 1.5, 2-point drop, it's only a $5 risk, but you'd be banking on that happening in the next 5 minutes. Then you really don't have a trade on the way up, 1263. So you're talking about a 1.5 straddle for $15 if you think the gold's going to move that much. I don't really see much moving it. It's ran all the way up 2 deviations today, and it's just sitting right there at the deviation level. So if you were trying to do that trade, I mean, that would be the issue you have is you're really expecting it to bust through the 2 deviation level and close above it. And there's obviously a very very low probability of it happening. So that'd be the difficult part on the buy side. On the sell side, there's just not that much activity for you to be able to, usually at this time of day with these few minutes left, to be able to actually place a trade. So I'm just trying to see if we got anything else to make sure I'm not missing anything in the process. But I'm pretty sure we don't have just a great trade setup. If we don't, that's okay. So we don't want to force a trade. We don't, even if it's only, people go, it's only $5. Hey, $5 may sound small, but you start doing in one contract, no big deal. You start doing 10 or 100 contracts, it starts adding up. So, so just, be wise in that. But I mean, 1260, you're talking a 1.5 move, 1263 on the upper side. You're talking basically a 1.5 move up. So it's got to move a 1.5 up or down. It has to do so in 4 minutes. You're looking at a $10. Now, if it works, you're going to make $90. Okay? But that's a big if. So it's a small risk, but if you start doing 10 contracts, 100 contracts, that number gets bigger and bigger and bigger. Obviously, now it's, obviously you're only risking 10, you're only risking 100, you're only risking 1,000. Hey, if you're risking 10, you need to make, $90 or $900. If you're risking, 1,000, you need to make $9,000. That's all great. It depends upon if it actually has the ability to move that far right into expiration. And looking at it, don't really see that. Also, another little tip I do is I go in and I will pull up a DOM and look at a DOM on it just to see if I can find anything on the DOM that says, gives me a clue as to where it might move to. Let's see here. And what I mean by that is I'll look at like the order depth to see if I see any depth of the orders in the volume of the orders that tells me where the price might move or where it may hit a roadblock. Okay, there we go. And so, this being oil or gold right here. So really, basically we're talking about move down to 1261 and a settlement there too. And we pretty much have equal volume or equal balance of depth of market on both sides of the gold futures. So there's not really a big push in either way to move the market anywhere. It's probably going to oscillate between those bigger order sizes, between 1261.4 and my guess would be 1261.7. And I think that's probably the oscillation we'll get into the last few minutes. The reason I say that is because that's where I'm seeing like 24 to 25 contracts. It keeps popping in every time it moves. But anyways, so that's that order for you. And let's move on to the next item on the list. Let's start checking out our deviation levels. Let's also make sure we have our plan ready for tomorrow. I got you ready for today. Okay, you know what's coming up at the end of the day. You got that piece in your piece of the pie there, put in your new trading plan. So let's see if we have anything else that you need to be aware of. I just want to make sure I'm not leaving anything off the list. Tomorrow, again, WEF meetings, and let's see here. What else do we have? I lost my chart. Okay. We'll be right back after this, and we do have one report you need to be aware of tomorrow. So we'll talk about that right when we get back after this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so let's check this out. What happened? Because it did do a little run up there, okay? Could have got you a little excited if you're trying to pull that strangle off. Remember, I said that deviation line, the probability of it expiring above it, 130 right there, a pit close. And it ran up. We got a high of 1262.8. And, but that wasn't enough, okay? And so we weren't able to actually hit that deviation level, 1262.7. Where did it close at? Closed at 1262.6, below the 2-dev level. And there's only like a 3% chance the thing actually is going to close above that level. So, at expiration. And, it was within a tick, but it didn't close above it. So, therefore, that's why that buy side would not have been the best trade. Even though we had a long, all that stuff, I'm looking at the market. Would not expect at this time of day, where we're at on the deviations, for that trade to be a profitable trade. Okay, so putting all the pieces together, that gives us gold. I just wanted to wrap that one up since it was right there and going on. We can go back over. Let's see. Let's check out. Oil making some big moves. With oil inventories. Got a nice move. It ran up. And let's see. How much are we getting on this? I still need to change that. There we go. All right, so we got a move. We did get a high to low 1 deviation. And I always remind people, don't forget to check that out. And right there. So right there, we do have a high to low of 1 deviation. move on up right at this point. And you can see where it's moving up. Here's the 1 deviation level. It's moving up, moving up, moving up, and then it finally hits it right there. So that becomes our 1 dev level that we're paying attention to. And then it just starts oscillating right around that and starts pulling back down. Now remember, how do we trail our stops? We talked about this yesterday in quite a bit of detail. And if you're in a long trade, say you did take this, obviously the oil inventory, you catch this going up, closes above a deviation, you tighten it. Goes below it, above it again. You tighten that stop. Okay, again, right there. And then I have a few different ways that I trail, but this being the simplest one, just the deviation levels. And then it hits it, and then you have a short trade, and it hits it right there. And of course, at the same time it hits it, I also have a short signal. So that's always nice. But basically, not looking for any kind of big up move at the moment, at least. I'll be trailing that, watching it. But I'm not looking for any kind of continued large up move on oil for the rest of the day. Pretty much, I'd be putting a fork in it saying it's done unless I see something else. But again, we got our deviation move. And when that happens, retracement, flat, usually not continuation, especially if we hit the stop after the deviation move. All right, so over here on natural gas, be rolling over here soon. On natural gas, we definitely got our deviation move. We got that last night. It was already taken off. And high to low deviation happened about 5:30 in the morning. And then kept running on back up. And then moved all the way back down at a deviation, high back down to, low. So pretty sweet just to be able to track that and see, each step of the way as it's moving. That knocks out our main energies there. We can go over, and we just knocked out gold. Let's check out while we're here. We'll look at silver. And then we'll check out copper. So silver moving on up. We're we grabbed deviation again. We knocked that out first thing in the morning. And it moved on up and hit the 1 deviation level of 9 a.m. As well. And then moved on up and just kept going. So finally pulling back down, and looking like it's pretty done. They've exhausted, I think, most of the order supply there in silver for the day. And hopping on over to copper. On copper, we had a pretty big move down on copper today. Ran down, hit that deviation about 10 a.m. This morning we had a 1 deviation move there. And just to show you, if we back up a little bit, it makes a little more sense. But you see the move, drop, 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 bam, hits it. And then it actually basically pretty much makes a 1 deviation pullback. And then it drops way down, and now we start actually seeing a 2nd deviation move in the process. So, meaning like we went 1 deviation down, we went 1 deviation back up, we went another entire deviation and a half back down. So, pretty wild move. Usually we don't see that kind of move at all happening on copper to get all 3 of those, but, pretty sweet. So hopefully some of y'all were able to take a little bit of advantage of some of that. And let's see here, going in, by the way, if you ever see like where I see the green and red and I'm short, I'm going to use this green as like a point to I say, hey, if I haven't trailed my stop, I definitely need to trail my stop now. It's not a long entry for me yet because I need other confirmation, but I definitely, if I have not trailed it, time to trail it. All right, get a little bit tighter in here. Let's go over and let's look at a couple other markets. Corn and soybeans really flat as far as right now. But that doesn't always tell the whole story. As you can see, actually, corn decided to finally start making the move. Just had a really small deviation today, so it was not big at all. We're only talking 4 points for a deviation move. That's how low implied volatility is on corn. Some days we'll get 40-point moves and 20-point moves on corn. So to only have a 4-point deviation is really, really small. We've had that lately, though, 4 or 5 points, except for when the ag reports came out. So, but anyways, it went up, it hit its deviation, boom, it dropped right back down. But I'm sort of choppy there in the process. We look over at soybeans. And soybeans, now we got a nice move there. We ran up to our 1 deviation level, pop and drop, dropped all the way back down, made a full deviation retracement. So just looking at the, looking at the net for the day, you don't see any kind of movement in corn. You go back and you look at that detail, and you can see there was a really nice move in soybeans. It was smooth up and smooth back down. So it wasn't even choppy. It was just a great, great trade setup all the way. Let's check out and look a little bit further into our indices. Catch up on the indices today. We've had some moves going on. We had the S&P and a lot of... now let me clear this out. Let's see here. Just get rid of that. Okay. So right there on the S&P, moving down. We're actually down at 1 deviation. Things slow down for a little bit, but not completely. We're still staying short. And then finally we get a long right here. Starts pulling back up, but flips on us not a few points, about an hour later, and starts moving on back down, and heads right on down to that 1.5. So we got some nice movement on the S&P, and just really a great trend after moving up and then coming back down, pulling back up, coming right back down to another half deviation bounce, and a lot of good entries along the way. Let's check out the Russell. See what we got happening this afternoon here on the Russell. Well, after the move down that we had this morning, had a little bit of a pop, a little bit of a chop going on right there, but then it decided to go ahead and continue on down. Continued down, and then we've been pretty flat most of the day. We're starting to pull in some new lows right now. We'll see if we keep getting that, but we're at the 1 deviation level on the day. So not expecting a whole lot of continued sell-side pressure on the Russell at this moment. Let's look at the Dow. So on the Dow, we are down 1.5. We're past the 1 deviation, which is not holding at the 1 deviation. It's down to the 1.5 right now. It's had earnings this morning. It's going to have more earnings with Microsoft this afternoon. No telling where this thing's going to end up at 4:15. So just play your cards right on that one. But right now we're short. If it does decide to continue to go short, the other indices are sort of holding on at the moment. If it does continue to go short, next target will be 16.032. So if you were looking for a short target, that would be what I'd be targeting on the downside at the moment. And that actually we could bring up a potential trade on that. Hold on, let's see if we even have the strikes for it. So with such a move there, but we might be able to put on maybe a trade based on knowing that those earnings are coming out. What we can do. And give me 1 second here. And there we go. Okay. So pulling up the binary scanner. I just want to see if we have a cheap, reasonable strangle. That's what I'm looking for at the moment. Knowing that we have these earnings coming out. What do we got that we might be able to do on the Dow? We'll also look at the NASDAQ. Okay. And so we're going to go over here. We're going to check out Dow. We'll check out NASDAQ. Get rid of everything else. Got a dollar-yen trade on there that's working out well. All right, so 16.032. Here, let's shrink the NASDAQ. We'll come back to that. Let's also, ideally, I want this to the end of the day, okay? So I'm just going to hit daily. Get rid of those intradays, get rid of those weeklies. 16.03, that's 84.50, okay? And then let's look at, what do we got on the upside? 16.175. So also, looking at that same trade setup, okay? Looking over at a potential, what could we do? Could we do the same thing on the NASDAQ? Because, Microsoft's in both. So, you could split your risk. I'm not saying do double the trade. Don't do double the risk. If you're doing 10 contracts, if you're going to risk how much ever, cut that in half and do, half on each. All right? And let's see here what we got. Okay, so we got the market over here currently at 1 deviation at 35.86. So we could expect a half deviation move, 35.68 up to say 36.03. So let's see what that gives us for the 415s. So 3603. We got 608 for $11. We got 04 for $12.50. We got 12, so we got a whole line up there. 4812, so pretty tight. And then let's go down the other side. 3568. And we got that range right there. Okay? So we can look at these trades and go, okay, which ones do we want to do? How do we want to take advantage of this? And you can literally put on the exact same combination of what we did before. And, you always look and go, is there a better one that's closer, et cetera? But really, we're looking at these, and these are pretty much the best payouts. There's not like a higher payout above it. Every once in a while, they do get inverted. You'll find something. But in this case, so your quick trade would be, this is the one to make the money to pay for the other trade. Okay? So you go in here, you got $13 risk. You buy the upper contract, you got $12 risk. You sell the lower contract, you make $25 on the trade, and you would get out with about a $19 profit. Okay? So we throw that one on for 13. We throw this one on over here for now $13 risk, 87. There we go. We get those trades in. As soon as we get them in, we're going to hop on up here to the NASDAQ. We're going to set our take profits first. So on the sell side there, we're going to update this and put this up where we're going to get out, buy it back. Okay, at 57. So we buy back lower, then we sell at 87, buy back at 57. Sounds obvious, but you'd be surprised. And then we got the buy right there, buy at 12. Let's sell it higher. And one of the big advantages of the scanner right here is it organizes all your orders for you. And it may not sound like a big deal, but if you go in and you start trying to match all this stuff up inside the Nadex platform, it can get really confusing. What open positions connected to what, working order and all that. Let me show you. If we go over here and we look at this, on these contracts, you got your open positions, but then you got your working contracts. Which ones do have them, which ones don't have them? Do I have the right expirations? Do I have the right strikes? You're literally trying to go back and forth. Versus right up here, it connects any working order with the contract. So open and working are always together. I can know which ones I do or don't have working positions on. And then I'll go over here. So now, okay, we got that one. Now let's go in and go, okay, we're going to make about, for risking somewhere around $25 on it, we're going to make about 20. Then let's put in the next higher. So we can go in and do the 3608s on our long side, and we'll do the 3560s on the short side. All right. We'll be right back after this break.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.